actually is one thing that we are #1 on currently. Since 2002, no state has cut government revenue or spending as much as we have in Minnesota. And coincidentally, during that same time, Minnesota's rankings compared to other states have fallen in 12 out of 13 key economic indicators. These are things like the poverty rate, percentage of people that are covered by insurance, unemployment rate, spending on education. All of those things have taken a huge nosedive during the same period of time as well. And to make matters even worse, there's a very ugly racial dynamic to this work as well. Some of you may have seen a report that came out last week that said that the African American unemployment rate in the state is 3 times higher than the rates for whites in the state. It's the highest racial disparity in the entire nation. So that is something that we are #1 on. Now we can really, in this critical moment, continue this downward slide for the state, or we can start to act and to do something.
Inequality has become a serious issue again in this country. And it's easy to say, well, it's always that way, it's going to be that way. But I think the facts here will demonstrate that it does not have to be that way, and that we're all healthier when we all do well. In 1913, we implemented the income tax system in this country. So the chart starts in 1913. And it looks at the percent of household income that goes to the top 1% of households in this country from 1913 to 2003. And you'll see 2 periods where it really peaked, and the top 1% was taking home almost 25% of the nation's household income. And those years were 1928 and 2007. What happened in 1929 and 2008? Didn't work so well, did it? And I think when we see that rising inequality, there's a myth. So I want to just define marginal tax rates for those of you who don't spend a lot of time with the IRS code. What that means is we're all taxed at the same percent up to a certain amount of money. So if you make over $250,000, you're taxed at the same level everybody else is up to that level. What our proposal is now is that if you make over that as a household income, that your tax rates go up to 39.6 instead of 35. So that extra 4.5% is only on your income over that $250,000. It doesn't apply to the entire amount. So that's what a marginal tax rate is. One of the little tidbits I like is that just in the last decade, with the Bush era tax cuts for the wealthy have cost us over $700 billion.
People at the lowest end pay a much higher percentage in all state and local taxes added together, property, sales, and income, than people at the very top. It's really kind of flat for most people in the middle deciles at about 12%. At the very highest ranges, people pay a smaller percentage. And that's because even though the income tax is mildly progressive in Minnesota, the property and sales taxes are enormously regressive, a higher burden on those at the bottom and middle than those at the top. And so this is often overlooked. And what you'll see from the anti-government types is selective statistics that will focus on the income tax alone, and that is wrong. It's a mistake. It does not represent the bottom line. This is the bottom line. And actually, if you impose the federal burden on top of this, those at the top still pay a slightly smaller percentage in Minnesota.